The push to seek returns globally has never been stronger. We recently spoke to two Morningstar medalist global fund managers with strong track records about where they are seeing the opportunities. Magellan's Nikki Thomas has just returned from overseas and particularly noticed a trend in the cashless economy.
I just went through 6 different countries with 6 different currencies, and not once did I use cash. That's just amazing, but shows you just how quickly the payments landscape is changing around the world. There's certain companies that we're obviously invested in that have a wonderful exposure to that shift away from people using cash in their transactions across the globe, even in emerging markets.
Nikki also likes opportunities from the e-commerce theme playing out in China and demographic changes in the US.
Most people believe China will have online e-commerce as a bigger part of consumption well before other parts of the developed world. And I think in the US, the changing consumer landscape is absolutely fascinating. When you think about the shift in demographics, the shift towards millennials and the spending power that they have and the minorities in that market, when you think about the changing and the redefining of convenience, convenience is being redefined by businesses like Amazon and Uber. Social media and the impact that's having on the way information is transported across consumers and thus what they see as important to them are all changing the landscape quite rapidly. Some companies saw this coming and really adapted their businesses to it or have been a part of the transition, businesses like Uber and Amazon.
PM Capital's Paul Moore has also returned from overseas. In fact, Moore was in Greece as part of what he calls an investment adventure. He prefers to remain cautious with that part of the volatile world, but is pleased with a recent investment, a CBA-style stock, but for half the price.
And Bank of Ireland is just the Commonwealth Bank of equivalent of Ireland. In fact, its market share is higher, and because there's not too much competition, their spreads are better. Ireland's now recovering very strongly, so we think that it's probably going to be in a position to pay 70% payout ratio very, very soon, and relative to the Australian banks, it's probably a third to a half cheaper.
Moore also sees value in domestic bank franchises in other parts of the world.
The domestic banking franchises, which are basically a yield play, and a recovery in earnings. So they're basically a replica of what's played out here in Australia over the last 10 years, but they're only just starting. And we're basically, one of the focuses of the last trip a couple of weeks ago was the Morgan Stanley conference in London, where all the CEOs of the big banks were presenting, and everyone was just focused on dividends, and they're starting to come through. So that is definitely playing out, and that's probably 20-30% of our portfolio.
In a world of virtually zero interest rates, Moore has invested in a number of high growth companies.
Visa and MasterCard's an interesting one, and then it's really just, every quarter they pump out double-digit volume growth. Great franchise. It's just like the Harbour Bridge in terms of the money system. So they just pick up a little clip, but it's growing double digit, and so you're getting 15% types earnings growth. So just sit and forget. And then the exchanges, again, they're sort of monopolies with a big recovery in earnings ahead of them, and you're starting to see financial markets starting to normalise, investment banking activities finally starting to pick up. So that's a big component of our portfolio. So if you think about it, when you've got zero interest rates, you either want really good yield, relative to those zero interest rates, which is the banks, or you want good, solid organic growth, and that's your payment processors, your exchanges, your Googles of the world. And the beauty of all those businesses, they've got no debt. And if you think about picking up 0% on a Swiss government bond or a German government bond for 10 years, highly indebted Europe versus no debt companies that are growing double digit, it's kind of a pretty interesting arbitrage at the moment.
But like all investors, Thomas and Moore confront a number of challenges. Thomas sees particular hazards when interest rates do eventually rise.
Probably the primary challenge I'd see today is really around this prospect of rising interest rates, particularly in the US, but ultimately around the world, that the interest rates where they are today probably aren't sustainable for any lengthy period of time. And that means people really need to think how to be positioned for that change, for that to happen, and to allow them to continue to create value in the returns they achieve, but also being very mindful of the risk that they're taking in doing that. So the pricing of risk, I think, doing that sensibly is a real challenge for people in markets today.
For Moore, it's all about keeping that long-term focus.
Basically, you've got to find the opportunities when they're presented, be willing to be patient, live through short-term volatility, live through all the questions from the rest of the industry. Because if you're a genuine contrarian, or if you're a genuine investor, you're only going to make money by being contrarian. But it means that you're doing something that the majority aren't doing, and so they're all looking at you saying, what's wrong with what you're doing, or we don't like what you're doing. The reality is, think about it. If you're doing what everyone else is doing, you ain't going to make any money.